This is Boom Bust, and these are some of the stories that we're tracking for you today. First up, we're talking about the snail-like speed of the internet here in the U.S. and why the country that literally invented the thing is now behind Estonia in terms of download speed. Sad but true. Then we have Adam Minter on today's show. Adam is author of Junkyard Planet, which examines the trash trade and its effects on the global economy. Your trash is someone else's treasure. Literally. And it's the end of the week, which means it's viewer feedback day here on Boom Bust. Edward Harrison and I address your questions, comments, concerns live on the show. You won't want to miss a moment, so let's get to it. Here's an interesting matter for you to ponder as you head into your weekend. Why is the internet in the U.S. so darn slow? Well, in short, it's because telecommunication companies have divvied up the market in such a way that Comcast, Time Warner, Verizon, and AT&T are all in a position to operate with virtually no competition, none at all. Now, you might be asking yourself, how? In a country that calls itself home to the world's leading tech companies, such as Facebook, Google, Microsoft, Amazon, now that's just to name a few, there's many, many more, end up ranking 31st in the world when it comes to global download speeds. 31st. Well, Susan Crawford, a former special assistant to President Obama for science, technology, and innovation, told BBC that it's because, quote, "We deregulated high-speed internet access 10 years ago, and since then, we've seen enormous consolidation and monopolies. Left to their own devices, companies that supply internet access will charge high prices because they face neither competition nor oversight." Now, Crawford went on to say that the complete lack of market action in the ISP space has kept prices artificially high, speeds low, and infrastructure outdated. Thus, Uruguay, Estonia, and the Åland Islands, I didn't know what they were either, they're all ahead of America when it comes to global consumer download speeds. It's very, very true. Not to mention, high-speed internet in the U.S. costs nearly 3 times as much as it does in the U.K. and France, and more than 5 times as much as it does in South Korea, which, by the way, ranks 4th for consumer downloads, just behind Hong Kong, Singapore, and Romania, who rounded out the top 3, in case you were wondering. But why do Americans pay so much more than other countries? Because we don't have a choice, is pretty much the answer. Now, first of all, in the wired space, a competitive picture of the internet might look like this. Check it out. There you go, you have it. But after 2006, when Verizon gobbled up backbone provider MCI, the picture changed substantially and now looks like this one. Yeah, the little guy in the middle. That to this. Now, net neutrality, all I can say is eat your heart out. Now, the local markets tend to be dominated by just 1 or 2 of these main providers, as you can see in that picture. And these carriers then bundle basic broadband, TV, and phone packages, creating a price that you either pay or you don't. Second, in wireless, there are only 4 major national carriers which run on incompatible networks, and they control 89% of the market. Can you say oligopoly? Because I can, at least today. Oligopoly, yay, got it. Now, the Federal Communications Commission is in charge of managing broadband development and regulating companies like AT&T and Comcast, but the FCC has shown no ability to do so. The FCC has basically said little to nothing about the colossal Comcast-Time Warner deal. Instead, they've chosen to let the Department of Justice take the lead on this clearly anti-competitive merger. Now, the FCC is tasked with protecting the consumer's interests. Yet during this defining moment in telecommunications history, they've basically decided not to show up to the party. FCC, on this show, we call that a bust. Your car is a clunker and you want a new one. You either sell it or you junk it. Now, if you junk it, it's out of sight and out of mind, for you at least. But after your car is junked, it begins a whole new journey that makes someone, somewhere, a lot of cash. Yes, the economy of junk. It might not be the sexiest gig in the world, but the numbers behind its dirty facade may surprise you. Adam Minter, author of the book Junkyard Planet, examines the junk trade and how it affects the global economy. Now, we spoke with Adam a couple months back, and we're fortunate enough to have him join us again last night via Shanghai. He came on the show. But Adam brings us his updated perspective on the underlying trash trends and what they reveal of the global economy. It's pretty interesting stuff. Here's what he had to say.
Sure. Well, I think there's two big areas where you can really use junk, scrap, whatever you want to call it, to sort of extrapolate sort of wider economic trends. One is just pricing, and you know, it's legendary, and it's also true that Alan Greenspan, when he was chairman of the Fed, he would like to start his day with scrap prices, North American scrap prices. Why? Well, one, scrap is a spot market, so even though you know, you're looking at a steel price, you know, usually steel prices are not, you know, very flexible. They're not very elastic. They tend to look at longer term, tend to reflect longer term economic trends. Whereas if you look at, say, a Chicago scrap steel price, it's called the heavy melting steel price, HMS1 price, you're actually getting sort of a real-time view into what the demand is for steel, because scrap steel is made into new steel. So it's a very nice spot market. And now, you know, since the days when Greenspan was at the Fed, we now have a global market in this kind of stuff. So you get a very nice sort of global picture of what might be happening in certain kinds of spot markets. The second area that's very useful is logistics, and shipping in particular, because demand for scrap reflects, you know, economic demand in certain areas, and shipping costs, you know, whether it be for shipping, you know, iPads, say, from South China to the United States, or raw materials, again, reflect underlying economic conditions very nicely. And again, it's almost like a spot market. I mean, you can by the hour get a feel for just what kind of demand there is for scrap copper, which is made into new copper, which is made into copper cookware, or it could be made into, you know, iPads again. It's a wonderfully elastic way of seeing underlying economic conditions.
You know, actually, just on Thursday's show, we did a story about the P3 Alliance, which is a shipping alliance between three of the largest shipping companies in the world. And it's really going to affect, you know, global shipping methods, prices, freights, etc. How will that affect the scrap metal industries?
Yeah, and it's not just scrap metal; it'd be scrap paper too, actually, which probably will have even a bigger effect. You know, one thing that surprises a lot of people when I talk to them about scrap is that by volume, scrap, and again, by scrap, I'm talking scrap paper, scrap metal, scrap plastics, but scrap paper in particular is the largest volume export from the United States to China. It's also the largest export volume export good from the EU to China. Why? It's because, you know, the EU and the US, they buy so many goods, but in return, they really don't have much new to send back to these places. So as a result, the shippers like to discount containers. So, and I'm just speaking very roughly here, a one-way container from South China, Shenzhen, perhaps to Los Angeles, right now, let's just say it would be somewhere in the range of $2,400. The backhaul, the way back, because there's so little stuff for Americans to send back, is right around $300. And that's not going to change that much, quite simply because the scrap industry, in a sense, has the shippers over a barrel, if you will. Because if the scrap yards aren't shipping stuff in those empty containers, there's nothing else really to go in them. So it's not going to have a dramatic effect, most likely, on the scrap shippers. I mean, they really do have leverage in this.
That's interesting, but I want to ask you, do you think the P3 Alliance is anti-competitive for other shippers out there?
Right. Yeah. Well, it very well could be, and you know, and again, you know, this is just my wild guess, but I think it could be very anti-competitive even for the scrap dealers. I mean, right now, you definitely, you know, have leverage on the recycling industry side, but theoretically, once you have this P3 alliance going, even if they do have sort of this desperate need to move containers back to Asia, because let's face it, that's where containers move at this point. Theoretically, they could leverage that into some uncompetitive pricing for against the recycling industry. Could be a difficult situation.
Now, you mentioned Alan Greenspan starting his day looking at scrap prices. So what have you been seeing in the trade with regard to the global economy as a whole? Are things recovering steadily since the crisis, or are we still not out of the clear yet?
Not out of the clear. Into the clear, I should say. You still see prices being very soft. One of the you see two things actually reflected in the price. One, you don't see a lot of demand out there. Certainly, the prices are higher than they were, 10 years ago because global demand is higher, but they haven't returned by any stretch to where they were in 2008. The way that prices are sort of bouncing around these days, there's a lot of volatility in the scrap markets, indicates to people who are selling in particular that there's a lot of speculation, and that shouldn't surprise anybody in a sense. I mean, one of the things we've seen develop really in the last 5 years is the development of the use of commodities, and scrap, especially scrap metal, is a commodity, and so you actually do have people using it in financing deals. So that's sort of a very worrisome trend. Geographically, you also see a lot of divergence in prices. Now, we're not talking giant divergences, but between Shanghai and South China, Shanghai and Guangzhou, those are two very different markets, and you tend to see a much stronger market in South China right now than you do in the Shanghai area, which for some traders is very worrying. It could mean any number of things, but I mean, the most obvious is that if the Shanghai businesses are not, the manufacturers aren't needing raw materials, you're seeing some softness there. So it continues to be the case that China is the most important driver in prices in the scrap metal industry. The U.S. economy's recovered, but without the China recovered as a price driver a little bit, but without China, the bottom would really fall out. So you still see a lot of softness there.
Can you talk to me a little bit about Europe? I want to understand how that plays into the industry.
Great question. Well, probably in the last 5 years, and really since 2008, Europe has been one of the biggest, if not the biggest, shift in the global scrap markets. Quite simply, as we all know, Europe's manufacturing sector has been, absolutely hobbled, not just by 2008, but that's made a big difference. And that's reflected in a couple of ways. One of the most important sources of scrap aluminum, comes from old automobiles. The way an automobile is recycled is you toss it into a giant shredder, think of it as a blender, and out comes all kinds of metal. Well, Europe recycles millions of cars per year. Since 2008, Europeans are keeping their cars longer. And so as a result, there just isn't as much aluminum coming onto the market from Europe, and that's had a profound effect in China. The Chinese scrap buyers who used to get their aluminum from Europe, they're now having to look elsewhere. Some of it's being replaced by China because China, is developing, and it's developing its own scrap metal, and some of it's being replaced by other metals. Some of it's being replaced by metal from Japan. But Europe just isn't generating the same amount of scrap as it used to, and quite simply, it's because Europe isn't as wealthy. Right. It's not just the aluminum, and so that's a profound effect. So it's had effects in pricing, and there have been some.
That was Adam Minter, author of Junkyard Planet. Time now for a very quick break, but stick around because when we return, we're bringing you the best of the best from this past week. Plus, Edward Harrison and I tackle your viewer feedback in today's In the Margin segment. But as we head to a quick break, here are a look at some of your closing numbers of the bell today. Stick around. Patients are force-fed. Two explosions near the finish line of the Boston Marathon.
More than 1,000 people have gathered.
What is the latest that you're hearing about the number of victims?
We welcome Aaron Aid and Abby Martin, two of the terrific hosts on the RT network.
Boom Bust, it's going to give you a different perspective.
Give me one stock tip.
Oh, never. I'll give you the information, you make the decision.
Tell me about how breaking the set works.
It's a revolution of the mind, it's a revolution of ideas and consciousness.
Are you frustrated with the system?
Yeah, extremely.
Your politics would be described as angry.
I think I'm a strong female.
Are you single?
I've got a quote for you. Let's make it tea time. Stay away from that story. Let's get this guy elected. Let's smear that guy. Instead of working for the people, politicians and the mainstream media are working for each other. Bribery, staged events, bias, and propaganda. I think I'd rather play alone.
I would rather ask questions to people in positions of power instead of speaking on their behalf. And that's why you can find my show, Larry King Now, right here on RT. Question more.
It's time now for our weekly Best Of segment, and we have 3 clips for you today. First up is Cullen Roche on whether the great financial crisis could have been avoided. Then we have an amazing clip from James Turk in which he explains why he would take gold over today's credit-based fiat currency any day of the week. True stuff. And we're washing it all down with Jim Rickards, who gives us his take on the viability of a non-monetary system. Enjoy. Looking back at the 2008 crisis, a lot of people in the financial blogosphere, which is your world for sure, they've been pushing the view that had the Fed eased monetary policy sooner, we could have avoided the great financial crisis. I got to know, what is your take on this?
So what you had was really a balance sheet problem. You had leveraging that was built up on home prices, and as long as home prices were accelerating higher, everything sort of worked. It was, in essence, it was a lot like a house of cards, and as long as that positive momentum in housing continued, the balance sheets were fine. But as soon as the prices started to decline in U.S. housing, you started to get big problems in real estate, and then you started to see unemployment filter through different segments of the economy, and then you started to get the defaults. And when the defaults started, that was the big problem, and that filtered through the financial system in a way that we haven't seen since really the Great Depression. So this was really a balance sheet problem. Unless you're an advocate of having the Fed come in and essentially bail out everybody, which I don't think anyone in the U.S. economy is really in favor of having the Fed do, then I don't see what the Fed really could have done to stop what was an inherent balance sheet problem.
Now, gold is a tangible asset, but it's not a productive asset, and it's not farmland or stocks which are tied to revenue streams or potential economic production. Now, I want you to take a quick listen to what Warren Buffett says about this.
If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it, all kinds of things. For 100 years, it'll produce things for you, and you still have the 100 acres of farmland at the end of the 100 years.
Now, maybe he's trying to sell his property in Nebraska, but the real question is, why should anyone buy gold?
Yeah, because gold is money. You can put a stack of $100 bills in a vault and come back in 100 years, or a stack of British pound notes in a vault and come back 100 years. Put those next to the gold. Gold will still have the same purchasing power. The pound and the British pound notes will not. An ounce of gold still buys the same amount of crude oil that it did 50, 60 years ago. An ounce of gold still buys a man's suit. An ounce of gold in ancient Roman times would buy a toga for a Roman senator. The thing is that we need money in our economy, and there are 2 types of money. There's physical money money, like gold and silver, or there's paper money, which is based on promises.
I want to get your view on the potential for non-monetary systems becoming dominant in the future. What do you think? Is that a possibility?
Well, there's going to be some kind of money. You know, the classic definition of money, it has three parts. It's a unit of account, it's a medium of exchange, and it's a store of value. Of the three, the store of value is the most important. Unit of account, I mean, you can count things with, you know, bottle caps or baseball cards. So almost anything, including Bitcoin, which is creating a lot of interest these days, can be a unit of account. Medium of exchange, again, it's all digital. You know, people talk about Bitcoin being a digital currency. Well, dollar is a digital currency. You and I might have some you know, paper dollars in a, you know, a purse or wallet or something we use to buy some coffee at Starbucks, but the vast majority of the transactions we do, whether it's credit cards or, you know, a paycheck that's direct deposited or paying your bills online, those are all digital transactions. The entire Treasury market is digital. They stopped making paper, you know, Treasury note certificates, I think 30 years ago. There are communal societies that don't use money, but they tend to be very small. I've never seen one on the scale of a nation or an entire civilization, certainly not the world. So if you're asking me whether money can be purely digital or virtual, or there could be new kinds of money, I would say yes. But whether there's a moneyless society, that's a little more of a stretch. Now, there is something coming along called
Well, there you have it. Time now for us to hear from you. It's in the margins time, and I'm joined by the one, the only Mr. Edward Harrison. Now, every Friday, Edward Harrison and I, we put you, the viewer, into the driver's seat, letting you steer the show with your comments, questions, and concerns, all sent to us throughout the week via Twitter, YouTube, and Facebook, social media stuff. Now, this first comment, it comes from Justin Templer, and it's about our segment on airlines changing their current business model for their frequent flyer programs, and Justin writes, why the fuss over rewards, comma, jealousy, question mark? If someone is willing to pay 5 or 10 times more, then why shouldn't they get something back? Question mark, end quote. Edward, what is your response to this?
I agree with Justin, basically, that, you know...
Capitalist.
Well, the reality is that these airlines are in the business of making money. And what I was trying to say in that segment is that you know, just like in many models, it's like an 80-20 thing, where 80% of your money comes from 20% of your customers. So they want to make sure that they have everything aligned with that 20%. So those customers are the ones that are the ones who are paying the most money, you know, for business and for first class.
I have to agree with you. If you spent more money, you deserve a better seat. That's fair. No problem there. But I think that the bigger, more drastic point is that it truly does get to this place where we are separating society. You're putting the haves and the have-nots like in totally different lines, in totally different places within the airport. They never have to see each other. And I think that's where it gets to the issue, no?
Well, yeah, definitely. I mean, that's a societal issue. The question is what can the airline do about it, you know, from within their own business model. Basically, what they're trying to do, and you know, the airline business, by the way, is a terrible business.
It's a terrible business.
You know, all of these companies have gone bankrupt recently. What they're trying to do is say, look, you know, these are the guys who are making us the money that are going to keep us afloat. We want to make sure that we incentivize them to go with us, so that, you know, if they have the opportunity to take another airline later on, we know because they paid lots of money, they're going to get a lot of frequent flyer miles, and they're more likely to stay with us, and therefore we could get a higher margin. I think that, you know, because of that, you know, because they're trying to incentivize this kind of behavior, other airlines are probably going to shift to this kind of model. And so then, you know, from a society-wide perspective, you have to ask yourself, you know, what does this represent? What's going to happen? But that's not something the airline can actually take on itself.
Right. The end of the story is don't invest in an airline, and everyone wins. Okay, I'm joking, but okay. Now let's move on to the Jim Rickards Peter Joseph program, which aired on Thursday, and we got a lot of comments about Peter Joseph's segment. It was awesome. We like him, and we like hearing from him, and we like hearing your comments. So let's play a clip from Peter's segment now.
Starting with the banking system and the financial sector, which I would say is a carcinogenic adaptation of the underlying premise of capitalism. The system itself isn't designed to cater to what we would term technical sustainability or social stability. In other words, you have something called market efficiency, which, as we all know, has to do with the movement of money, the acquisition of efficiency for profit attainment.
Ed, a carcinogenic adaptation of capitalism. The
premise of capitalism.
The premise, sorry, forgot that part. I respect and like Peter Joseph. I do have a hard time understanding him. And I mean, you went to the best schools there are. Your vocabulary is just as strong, if not better. Please translate and your thoughts on that actual comment.
Well, I think that he's basically calling it a corporatism, you know. And a lot of people would agree with him on many levels. Here's the thing: is that when he talks about, you know, the carcinogenic
adaptation of capitalism,
you know, he's talking about something that is a maladaptive bolt-on to what we originally had. So the question you have to ask is that the way that it's always been? Is that the actual premise?
Right.
You know,
and it goes back to the Malthusian thing as well.
Exactly.
You know, is it another interpretation of that?
I would say that it's not. You know, and you know, basically, from my perspective, what Peter Joseph is saying is he's saying that this whole system's corrupt, and bad things are going to happen. And not only that, it's completely unsustainable because of this infinite growth model. Now, I can see some of what he's saying, but ultimately there's something Malthusian about it, in my opinion, because, as you were saying, it's just going to lead. He's saying that it's unsustainable and that the system will collapse as a result of that.
And Justin Templar, this next commenter, he's back again. He agrees with you. Here's what he had to say. He writes, Peter's idea is that companies purposely add inefficiencies to keep things going is utterly stupid. Your competitor will see your inefficiencies and exploit it to take market shares away from you and increase their sales and their profits. Do it on a regular basis and you will find yourself out of business. Ed, what do you think of Peter Joseph's argument in terms of Justin's response?
You know, I agree with what Justin Templar is saying is that it just doesn't make a whole lot of sense. At the end of the day, the real problem is in terms of, you know, so-called shareholder value. The fact that basically, you know, workers are not getting a return, their wages aren't increasing, et cetera. And I think that's really what you're seeing is that workers aren't getting their share.
Sure. Now, we actually have 3 more comments and a string of comments about Peter, and the other 2 were positive and in agreement. So I just want to say that I don't have time to read them, sadly, but we love to have him on. We love starting conversations, so please, thank you for writing in. That's all we have for now, but you can see all segments featured in today's show on YouTube at youtube.com/BoomBustRT. We also love hearing from you. So please check out our Facebook page at facebook.com/BoomBustRT. You can also tweet at us at AaronAid, at EdwardNH. From all of us here at Boom Bust, thank you for watching. Have a great weekend. Ciao.
Bye.